Today is Monday, November 6th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains this morning, Mark, with conflict breaking out in the Middle East and war continuing to rage on in Ukraine, how is this affecting commodities and in particular grains?
Well, the situation in Ukraine is kind of a good news, bad news. All things considered, their crops have been pretty good. It's just a question of their ability to distribute them into the global marketplace. Their winter wheat crop seems to be going in just fine. Recently, the Ukrainian Grain Association raised their corn production estimate to nearly 29 million metric tons. That's just above the USDA forecast. However, they've also suggested 23 million tons of this crop is available to export. That's well above the USDA forecast of only 19 and a half. And since July, the Ukraine's grain exports, they've reached only 9.8 million metric tons. That's down 31% from a year ago when they were operating under the UN-brokered Black Sea Grain Initiative. To date, wheat exports are down 9%. Corn is down to 47%. So now the Ukraine must either utilize ports along the Danube River through neighboring Romania or using the Black Sea, staying to the western shoreline along what's known as the humanitarian corridor. So crops are there. It's just the volume just quite hasn't reached levels that they were hoping for. And the situation in the Middle East, that doesn't have a huge impact on grain trade, but it could, however, if it spreads outside of Israel, and mostly its impact, how it might impact energy prices.
Interesting situation. Mark, what are your expectations for Thursday's USDA reports?
Well, typically November production and WASDE reports are very important to the price discovery in the ag space. In recent memory, however, I just don't recall an instance where the average trade guesses going into this report are so close to what the USDA said in October. Perhaps that will make us a little bit more vulnerable to a shock in this go around. In corn, the average trade guess is just under 15.1 billion bushels, and that's up only 25 million from the October number. My estimate is at 15.045 billion bushels. So I'm actually down 20 million from the October number, as I'm looking for a little bit lower on the harvested acreage front. I expect exports to be cut 50 million bushels. That would leave ending stocks at 2.116 billion. That's just up a touch from the USDA number in October. In beans, the average trade guess is basically unchanged at 4.1 billion bushels. My estimate is 4.13, so mine's towards the upper end of the range of guesses. I expect exports to be down a little bit, crush to be up a little bit, and slightly lower on the import forecast. So my ending stocks is at 250 million bushels, up from the USDA 220, and I'm also towards the higher end of the range of guesses. In all likelihood, no matter what the USDA says on Thursday, 10-15 minutes after the report, we're going to be back looking at South American weather and its impact on their production.
Let's talk about South American weather, Mark. What's it look like and how's it applying, when we look at crop prospects there?
Well, this past weekend, we finally did see some pockets of good rain across some of the northern areas, Mato Grosso, Goiás, and into central Minas Gerais. And we also saw some relief from lack of rain across the southern parts of Brazil. Unfortunately, this forecast trend does not look like it will last long. Hot, dry conditions are expected to return across west central and north central parts of Brazil. And while another round of steady rains turns into heavy rains by next weekend across the south. So plenty of progress so far. Has been moving along slightly slower than normal pace, slightly slower than a year ago. We're almost half done, or just over half done now on soybeans, about 2/3 of the way done for the first corn crop. However, the fear is just, how much of this is going to have to be replanted because it's too hot, too dry across the north, and flooding in the south. So right now there's a slight lean towards lower production in both corn and soybeans in Brazil for Thursday. However, nothing major with so much of the growing season still ahead of us. Conditions in Argentina have improved significantly here in recent weeks with better rainfall coverage as they're really just beginning to kick off on their soybean plantings. So for Thursday, I think we might see a little bit of a tilt towards higher beans and slightly lower on the corn for Argentina.
Alan, last Friday, a weak unemployment report, or the numbers, unemployment numbers were weak. How has this influenced Federal Reserve policy?
Okay, well, almost all of the components of Friday's employment report were weaker than expected, including non-farm payrolls up 150,000 when a gain of 179,000 was expected. Private payrolls up 99,000. The guess was up 143,000. And the unemployment rate moving higher to 3.9% when 3.8% was forecast. So this suggests that the Fed is probably finished its interest rate hiking cycle. And it also pulls forward the timing for when the Fed is likely to actually lower interest rates next year.
And on GDP, what are the estimates for gross domestic product in the U.S. for the fourth quarter?
Well, first of all, third quarter GDP came in very good, actually coming in up 4.9%. In fact, that was a little more than the estimate. However, as of November 1st, we had one Fed district bank predicting fourth quarter GDP will be up only 1.2%. We had another Fed bank also on November 1st estimating fourth quarter GDP at up 1.236%. And keep in mind that both of these estimates were made before the November 3rd week employment numbers were released. So GDP estimates are likely to be revised even lower than those two Fed estimates.
The rest of the week, how about a rundown on any potentially moving market reports?
Okay, Tuesday we'll have the September consumer credit report guessed at a 10 billion increase. Wednesday, Fed Chair Powell speaks. We have Powell again on Thursday, and jobless claims at 220,000. And then on Friday, the November Consumer Sentiment Index guessed at 63.5. So I have to say of all these events this week, it'll be the two events with Fed Chair Powell speaking that are likely to have the most market-moving impact.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to talk to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.